Hey everyone. Welcome back to the channel. Today, we're diving into the ultimate guide to investing, 15 proven tips and tricks to help you grow your wealth and get closer to financial freedom. Whether you're a beginner or a seasoned investor, these strategies will level up your game. Let's get started. Tip number 1, start early and harness the power of compounding. Did you know that if you invest just $100 a month starting at age 25, you could have over $300,000 by age 65, assuming a 7% annual return? But if you start at 35, you'd only have around $150,000. Time is your best friend when it comes to investing, so start now. Use a compound interest calculator to see how much your money can grow over time. The earlier you start, the more you benefit from compounding, earning returns on your returns. Tip number 2, diversify your portfolio. Don't put all your eggs in one basket. Spread your investments across stocks, bonds, real estate, and even international markets. This way, if one sector tanks, your entire portfolio won't go down with it. Use index funds or ETFs, exchange-traded funds, to easily diversify. For example, an S&P 500 ETF gives you exposure to 500 of the largest US companies. Diversification is your safety net against market volatility. Tip number 3, invest in what you understand. Warren Buffett once said, never invest in a business you cannot understand. If you're into tech, focus on tech companies. If you're a math whiz, maybe look into fintech or data-driven companies. Before investing, ask yourself, do I understand how this company makes money? If the answer is no, it's probably not the right investment for you. Tip number 4, adopt a long-term mindset. The market is like a roller coaster, it has its ups and downs. But historically, it always trends upward over time. Don't panic sell during a dip. Stay focused on your long-term goals, and you'll come out on top. The S&P 500 has historically returned about 10% annually. Even during crashes, it has always recovered and reached new highs. Patience pays off. Tip number 5, dollar cost averaging, DCA. Instead of trying to time the market, invest a fixed amount regularly, whether the market is up or down. This strategy lowers your average cost over time and takes the stress out of investing. Set up automatic investments through your brokerage account. For example, invest $500 every month into an index fund. Over time, you'll buy more shares when prices are low and fewer when prices are high. Tip number 6, keep costs low. High fees can eat into your returns like termites in a wooden house. Stick to low-cost index funds or ETFs with expense ratios below 0.2%. Every dollar you save on fees is a dollar that stays in your pocket. Compare expense ratios before investing. For example, Vanguard's S&P 500 ETF, VOO, has an expense ratio of just 0.03%, while some actively managed funds charge 1% or more. Tip number 7, rebalance your portfolio regularly. Over time, your investments will grow at different rates, throwing off your desired asset allocation. Rebalancing ensures you stay on track with your risk tolerance and goals. Rebalance your portfolio once or twice a year. For example, if your target allocation is 60% stocks and 40% bonds, but stocks have grown to 70%, sell some stocks and buy bonds to get back to 60-40. Tip number 8, stay informed but avoid overreacting to news. The media loves to sensationalize market movements. Don't let fear or FOMO drive your decisions. Focus on the big picture and stick to your plan. Follow trusted financial news sources like Bloomberg, CNBC, or the Wall Street Journal. But remember, headlines are designed to grab attention, not always to inform. Tip number 9, have an emergency fund before investing. Life happens, car repairs, medical bills, you name it. Before you dive into investing, make sure you have 3 to 6 months worth of living expenses saved up. Keep your emergency fund in a high-yield savings account. These accounts offer higher interest rates than traditional banks, so your money grows while it sits there. Tip number 10, avoid timing the market. Trying to predict market movements is like trying to catch a falling knife. It's risky and rarely works. Instead, focus on time in the market, not timing the market. Studies show that missing just a few of the best trading days can significantly reduce your returns. Stay invested. Tip number 11, leverage tax-advantaged accounts. Max out your contributions to IRAs, 401ks, and HSAs. These accounts offer tax benefits that can supercharge your savings. In 2023, you can contribute up to 6,500 to near 6,500 to an IRA, 7,500 if you're 50 plus, and $22,500 to a 401k. Take advantage of these limits to reduce your taxable income. Tip number 12, invest in yourself. Your greatest asset is you. Whether it's learning a new skill, starting a side hustle, or reading books on personal finance, investing in yourself pays the best dividends. Read books like The Intelligent Investor by Benjamin Graham or Rich Dad Poor Dad by Robert Kiyosaki. Knowledge is the best investment you can make. Tip number 13, be wary of get-rich-quick schemes. If it sounds too good to be true, it probably is. Avoid high-risk bets like penny stocks or meme stocks. Stick to proven strategies and let compound interest work its magic. If someone promises guaranteed returns, run the other way. There's no such thing as a risk-free investment. Tip number 14, monitor your investments but don't micromanage. Check your portfolio regularly, but don't obsess over daily fluctuations. Set it up, review it quarterly, and make adjustments as needed. Use tools like Personal Capital or Mint to track your investments and net worth in one place. Tip number 15, seek professional advice when needed. If you're feeling overwhelmed, don't hesitate to consult a financial advisor. They can help you create a personalized plan tailored to your goals and risk tolerance. Look for a fee-only financial advisor who acts as a fiduciary, meaning they're legally obligated to act in your best interest. And there you have it, 15 investing tips to help you build wealth and achieve financial freedom. Remember, investing is a marathon, not a sprint. Stay patient, stay disciplined, and keep learning. If you found this video helpful, smash that like button, subscribe, and hit the bell icon so you don't miss out on more tips to level up your financial game. Let's get rich together. See you in the next video.